Hi, welcome to the Market Alert for Friday the 7th of July 2017. So yesterday in the pound, the market started off fairly quiet. We then had a buy signal and we saw the market shoot straight up, fill it, hit the target and then come back. So obviously there was some sort of news out as to why this happened, which is fine because it went in the right direction. And then we had the signal just before the end of the session that wasn't filled because the market moved back to the upside. Also, if you look at the daily chart, you will see that the market traded up to the 12977 area and found resistance there. So again, that 130 area is posing a bit of a resistance for the pound each time it's gone through it. You can see that it's ended up coming back and moving lower. In the Dow, we had the market sideways, which you would expect, and as I said in the alert yesterday morning, because the market's waiting for the non-farm payroll, so you've got this sideways move. You've also got this major support area here of the 21,400 level. Market came through and we saw the market filled there, and then the market moved back to it. Couldn't close above here. So interestingly enough, there's what's going on here is quite interesting, because the market's broken, it's come through, and there it comes back, and then it comes back again. So we're being told that there is some weakness in this market. It's not going through and just moving higher. There's an indication here that there is a resistance problem. First it's broken, then the market comes back, the volume's low, and that means there's nobody buying this one. But eventually they come back enough to stop out the trade there. But again, we break it once more. We've had the lows in the volatility in the background. We know the odds are stacked to a certain degree with the short side because of those lows in the volatility. We know there's a big move coming to the downside, and then this time the market moves lower, and then there's a signal there before the end of the session as well. But that's the way the market unfolded and the rationale behind what is going on there at the moment with regards to the Dow. Even though we've got this major support area here, we had the clues that the market is struggling at this level now. Let's have a look, see where we are on the overnight. The market waiting for those non-farm roll pay figures out today. There we go, that's what it's waiting for. Have we got anything else? We've got G20 meetings today as well. What else have we got? Manufacturing production from the UK at 9:30. Non-farm payroll. Anything before that? No. Oh, the Halifax HPI, but that's out at 8:30, but I wouldn't worry too much about that one. So the big one of the day is the non-farm payrolls, which you've got unemployment rate, average hourly earnings, and then interestingly enough, for a Friday evening, which is or Friday, sorry, not evening, Friday, Carney's out at 3 minutes after the non-farm payroll figures, and then at 4 o'clock we got the Fed monetary policy report as well, which is unusual going into a weekend. So let's see how things pan out with that as well. So watch that one at 4 p.m. Hopefully we'll get a decent trade off the non-farm payroll figures from 2:30 when the market opens, and that will be enough, unless the market's playing with this 21,400 and failing to close above it, then the short side's going to take over. So we're seeing some weakness there. Let's just get rid of the news and this, and let's have a look at the bigger picture of the Dow. You can see that we've had a situation where the market was playing with the 21,525, failed to get to that sort of level, and then has moved lower. Volume has increased as well, so there's definitely some selling about. They're going to do their best to try and bring this market back. If we look here, you'll see no doubts from there to there, that we're coming back towards 21,283. Watch out for this level. Also ties in with the low of this bar as well. And then moving back to the upside as well, we've got a new low for yesterday, so watch resistance. I'll just remove this top one if I can. There we go. Watch for resistance at this level here as well, 21,501. So 21,501 if the market can move higher. Just going back to the news, what's the forecast for the unemployment figures? Because it's always a very interesting one to see this. We've got the usual BS. They're going to show an improvement in the unemployment figures. Forecast at 175. Anything lower than that could create some volatility, so keep that in mind as well. Right, let's have a quick look at the implied volatility before concluding. Well, here's a turn up for the books. The implied volatility has at last managed to break out from the 9 resistance that we see there to 958 for yesterday, and that ties in, of course, with the market moving lower. That's the right thing to see. It's the right relationship for the implied volatility and prices moving lower. Let's see if this can start to move to the upside now, and more movement to the downside as well. So that also ties in with the market failing at the 21,400 yesterday. However, watch those unemployment figures at 130. See how they come out. If they come out at 200,000, then the market's going to go straight back to the all-time highs. Anything less than the 178, the market's going to struggle, because it will show that the economy is failing for Yellen and co. Right, that will do it for today. I will see you in the next one. I'll report in if there's anything to report about. Other than that, as ever, thanks for watching. See you in the next one.